Anticipated 35% growth in cryptocurrency adoption across e-commerce, gaming, and remittances by Q1 2025, analyzing global competitive dynamics and expert forecasts. Executive Summary. The landscape of cryptocurrency adoption is poised for significant transformation, with projections indicating a 35% growth in usage across e-commerce, gaming, and remittances by the first quarter of 2025. This surge is primarily driven by evolving consumer preferences, technological advancements, and a broader acceptance of digital currencies among businesses and merchants. As cryptocurrency becomes increasingly integrated into various sectors, it is reshaping transaction methods, enhancing user experience, and offering new monetization strategies. Key trends and dynamics. 1. Evolving consumer preferences. The drive towards cryptocurrency adoption is notably influenced by younger demographics, particularly Gen Z and Millennials. Reports indicate that nearly 40% of these consumers prefer shopping with retailers that accept cryptocurrencies. This inclination reflects a broader cultural shift towards modern payment methods that prioritize convenience, security, and privacy. Moreover, there is a rising demand for privacy-oriented cryptocurrencies like Monero and stablecoins such as USDC and USDT, which are favored for their security features and price stability. This shift underscores a growing awareness of the importance of data privacy in online transactions. 2. Technological integration. E-commerce platforms are increasingly adopting payment gateways that support a variety of cryptocurrencies. This flexibility enables retailers to cater to a diverse customer base, enhancing their competitive edge. Innovations like blockchain-based loyalty programs are becoming more common, rewarding customers with cryptocurrencies or NFTs instead of traditional points, thereby increasing engagement and customer loyalty. 3. Market growth projections. The global cryptocurrency market is expected to expand significantly, with a forecasted increase of $39.75 billion from 2025 to 2029, reflecting a compound annual growth rate (CAGR) of 16.7%. This growth trajectory is fueled by rising investments in digital assets and a growing acceptance of cryptocurrencies among retailers. However, challenges such as price volatility and regulatory uncertainties continue to pose risks to widespread adoption. 4. Sector-specific adoption. In the gaming industry, cryptocurrencies facilitate faster transactions and enable new monetization models such as play-to-earn schemes. In the realm of remittances, digital currencies offer lower transaction fees and quicker cross-border payments, which is particularly beneficial for users in developing regions. 5. Competitive landscape. The cryptocurrency market features a mix of established players like Coinbase and Binance alongside emerging entities focused on innovative solutions. Traditional financial institutions are also increasingly integrating digital assets into their offerings, creating a competitive dynamic that may lead to further advancements in the sector. Common themes across sources. The shift towards cryptocurrency is characterized as a fundamental change in transactional behavior driven by technological advancements and shifting consumer preferences. The emphasis on privacy and security is a recurring theme, highlighting the growing demand for privacy coins and stablecoins. There is a consensus on the transformative potential of cryptocurrencies in niche markets, particularly in gaming and remittances. Differences highlighted in perspectives. While some sources focus primarily on market growth and consumer behavior trends, others delve into specific applications of cryptocurrency, emphasizing its potential in niche markets. Regulatory perspectives also vary, with some sources presenting an optimistic outlook on integration into traditional finance while others caution against ongoing regulatory challenges. Timeline of events. 2022 to 2023, a notable increase in cryptocurrency adoption by major retailers including Starbucks, which began accepting cryptocurrency payments through third-party platforms. 2024, continued rise in investment in digital assets sets the stage for anticipated growth in cryptocurrency adoption. 2025, a significant integration of cryptocurrencies across various sectors including e-commerce, gaming and remittances is expected, reflecting a marked shift in consumer payment preferences. Conclusion: the anticipated growth in cryptocurrency adoption marks a pivotal moment in the evolution of digital transactions. This transformation is driven by technological progress in changing consumer behaviors, with businesses needing to navigate challenges related to volatility and regulation while capitalizing on opportunities to enhance their competitive edge. As cryptocurrency becomes more mainstream, its integration into everyday transactions is likely to redefine the future of commerce. Detailed analysis of sources. Source 1: E-commerce trends. A report from OSC Professionals highlights how cryptocurrencies are reshaping the e-commerce landscape. It emphasizes that consumers are increasingly drawn to retailers that offer crypto payment options which provide lower fees, faster transactions, and enhanced privacy. Key trends identified include the rise of privacy coins, the growing acceptance of stablecoins to mitigate price volatility, and the emergence of multi-currency payment gateways that allow retailers to cater to diverse consumer preferences. Source 2: Market growth projection. According to Technavio, the global cryptocurrency market is poised for substantial growth driven by rising investments and the acceptance of digital currencies among retailers. The report notes that while the market faces challenges such as volatility and regulatory hurdles, the overall trend towards digital asset integration is expected to continue. Key players in the market include major exchanges and innovators in the cryptocurrency space. Source 3: Market outlook. Coinbase Research provides insights into the future of the cryptocurrency market, noting the increasing public acceptance and usage of cryptocurrencies in everyday transactions. The report underscores the importance of security and consumer protection as the market matures, along with the risks posed by scams and regulatory challenges. By synthesizing these insights, it is evident that the future of cryptocurrency adoption is bright, with significant potential for growth across various sectors. The anticipated growth in cryptocurrency adoption across e-commerce, gaming, and remittances presents several counterintuitive insights. 1. Preference versus stability. While consumer preferences are shifting towards cryptocurrencies for their convenience and privacy, the inherent volatility of many cryptocurrencies poses a significant risk. This paradox highlights that while consumers may desire the benefits of using digital currencies, their hesitation to fully adopt them stems from fears of losing value in the process. 2. Privacy versus regulation. The increasing demand for privacy coins such as Monero underscores a counterintuitive trend where consumers seek anonymity in transactions while the regulatory environment is tightening globally. This can create a tension where consumers want to utilize cryptocurrencies for privacy, yet regulatory frameworks may push against such usage, complicating the landscape for both users and businesses. 3. Technology adoption versus traditional systems. As e-commerce platforms increasingly integrate cryptocurrencies, there is a counterintuitive reliance on established payment systems to facilitate these transactions. Despite the promise of blockchain technology to create decentralized systems, many businesses still depend on traditional financial structures like third-party payment processors to convert cryptocurrencies into fiat currencies, revealing a reluctance to fully embrace the decentralized ethos. 4. Youth engagement versus risk aversion. The younger demographic such as Gen Z and Millennials shows a strong preference for retailers accepting cryptocurrencies. However, this cohort is also marked by a high level of risk aversion, especially regarding volatile investments. This creates a dissonance where their enthusiasm for crypto as a payment method is at odds with their cautious approach to investing in cryptocurrencies themselves. 5. Decentralization versus control. The rise of decentralized marketplaces using blockchain technology suggests a move towards less reliance on traditional middlemen. However, this also leads to a paradox where the very act of decentralization may create new forms of control through algorithms and smart contracts, which can limit user autonomy in unforeseen ways. 6. Consumer trust versus market scams. As businesses increasingly accept cryptocurrencies, they are simultaneously facing challenges related to consumer trust due to the prevalence of scams and frauds in the crypto space. This situation is counterintuitive because while businesses strive to enhance trust by adopting innovative payment methods, the risks associated with cryptocurrency transactions may deter consumers from engaging with these businesses. 7. Growth potential versus regulatory challenges. The projected growth in the cryptocurrency market, with an expected increase of $39.75 billion from 2025 to 2029, contrasts sharply with the ongoing regulatory challenges that could stifle this growth. This paradox illustrates that while there is optimism about market expansion, the regulatory landscape remains a significant hurdle that could limit the actual adoption and integration of cryptocurrencies. 8. Integration versus fragmentation. The push for multi-currency payment gateways that allow for the acceptance of various cryptocurrencies appears to promote inclusivity. However, this integration can lead to fragmentation within the market, where the sheer number of options available may overwhelm consumers and merchants alike, complicating the adoption process. 9. Convenience versus complexity. The integration of cryptocurrencies is often touted for its convenience. Yet the actual implementation can be complex and challenging for businesses. This complexity may counteract the very benefits that cryptocurrencies are supposed to provide, such as ease of transaction and reduced fees. 10. Environmental concerns versus technological advancements. While cryptocurrencies like Bitcoin are criticized for their environmental impact due to energy-intensive mining processes, advancements in blockchain technology and the push for renewable energy solutions could mitigate these concerns. This presents a counterintuitive situation where the very technology that has raised environmental alarms could also lead to more sustainable practices in the future. These counterintuitive insights reveal the complexities and contradictions inherent in the anticipated growth of cryptocurrency adoption, highlighting that while the market is poised for substantial expansion, various challenges and tensions must be navigated for this growth to be realized effectively. The report on the anticipated 35% growth in cryptocurrency adoption across e-commerce, gaming, and remittances by Q1 2025 highlights several critical elements that may be easily overlooked by most readers. Below, we identify these key components and explain their significance. 1. Consumer demographics and preferences. A notable aspect of the report is the emphasis on consumer preferences, particularly among younger demographics such as Gen Z and Millennials. The statistic that nearly 40% of these groups favor retailers accepting cryptocurrencies is significant. It underscores a generational shift in payment preferences, driven by a desire for speed, convenience, and privacy. Significance. This demographic trend indicates that as younger consumers become a more significant part of the market, businesses that do not adapt to these preferences risk losing relevance and market share. Retailers should consider integrating cryptocurrency payment options to attract and retain this growing consumer base. This shift also reflects broader changes in societal attitudes toward money trust and digital transactions. 2. Technological integration and innovation. The report mentions the increasing adoption of diverse payment gateways that support multiple cryptocurrencies and blockchain-based loyalty programs. While the growth of payment gateways may seem like a standard technological trend, the specific mention of blockchain-based loyalty programs is noteworthy. Significance. Blockchain technology can provide unparalleled transparency and security, fostering trust in customer relationships. By rewarding customers with cryptocurrencies or NFTs instead of traditional loyalty points, businesses can enhance engagement and potentially create a new revenue stream if those assets appreciate in value. This innovation could redefine customer loyalty and engagement strategies in a way that traditional systems cannot. 3. Market growth projections and economic implications. The projected growth of the cryptocurrency market by $39.75 billion from 2025 to 2029 with a CAGR of 16.7% provides a quantitative framework for understanding the economic impact of cryptocurrency adoption. However, The report also highlights challenges such as price volatility and regulatory concerns. Significance: while the growth figures are compelling, the simultaneous acknowledgement of volatility and regulatory challenges is crucial for investors and businesses. It signals the need for robust risk management strategies when engaging with cryptocurrencies. Understanding these dynamics will be essential for stakeholders looking to navigate the market successfully. 4. Sector-specific adoption trends. The report discusses how cryptocurrencies facilitate faster transactions and new monetization models in gaming while also lowering fees and speeding up cross-border payments and remittances. Each of these areas has unique implications for the future of digital transactions. Significance: the distinct application of cryptocurrencies in various sectors suggests that businesses must tailor their strategies based on the specific needs and behaviors of their target markets. For instance, gaming companies may leverage cryptocurrencies to enhance in-game purchases and player engagement through microtransactions, while remittance services can highlight cost efficiency and speed, catering to global users. This sector-specific approach can lead to more effective marketing and operational strategies. 5. Competitive dynamics and institutional integration. The mention of competitive dynamics highlights the presence of both established players like Coinbase and Binance and emerging companies that focus on innovative solutions. Additionally, the report notes the increasing integration of cryptocurrencies into traditional financial services. Significance: the competitive landscape reveals a dual challenge. Startups must innovate to differentiate themselves while established players need to adapt to maintain their market positions. The integration of cryptocurrencies into traditional services indicates a broader acceptance of digital assets, which can lead to more stable regulatory environments and increased consumer confidence in using cryptocurrencies for everyday transactions. 6. Privacy and security concerns. The report identifies privacy and security as central to consumer adoption, with a rise in demand for privacy coins like Monero. This focus is crucial in a digital economy increasingly concerned with data security. Significance: as consumers become more aware of data breaches and privacy issues, businesses that prioritize privacy-centric solutions may gain a competitive edge. The growth of privacy coins indicates that consumers are not just looking for innovative payment methods but are also concerned about the ramifications of their financial transactions on their privacy. Companies that can effectively communicate their commitment to security and privacy will likely foster deeper trust among their customers. 7. Regulatory perspectives. The report touches upon the varying regulatory perspectives across different regions, which could impact adoption rates. Some regions may embrace cryptocurrencies, while others remain cautious. Significance: the regulatory environment is a significant factor in shaping the future of cryptocurrency adoption. Understanding and anticipating regulatory changes can help businesses and investors remain compliant and aware of potential market shifts. Companies that engage proactively with regulators could influence favorable outcomes and position themselves as leaders in the emerging digital economy. 8. Environmental considerations. While not a major focus in the report, the environmental impact of cryptocurrencies, especially concerning energy consumption associated with mining, remains a critical issue. Significance: as environmental sustainability becomes increasingly important to consumers and investors, companies that adopt eco-friendly practices or utilize less energy-intensive cryptocurrencies may benefit from positive brand perception. Addressing environmental concerns could be a differentiator in a crowded market and attract environmentally conscious consumers. Conclusion. In summary, while the report provides a broad overview of the anticipated growth in cryptocurrency adoption, several nuanced aspects are crucial for stakeholders to consider. Understanding consumer preferences, technological innovations, market dynamics, regulatory challenges, and environmental implications will be key to navigating the evolving landscape of cryptocurrency in e-commerce, gaming, and remittances. Those who overlook these critical elements may find themselves ill-prepared to capitalize on the opportunities presented by this transformative shift in digital transactions. 1. Consumer preferences and demographic trends. The significant shift in consumer preferences, particularly among younger generations like Gen Z and Millennials, is crucial for understanding the trajectory of cryptocurrency adoption. This demographic shows a strong inclination toward businesses that accept cryptocurrencies, with nearly 40% favoring such retailers. Their desire for convenience, security, and modern payment options reflects broader societal changes and expectations for digital transactions. This trend indicates that businesses must adapt to these evolving preferences to remain competitive in the marketplace. 2. Technological integration and innovation. The integration of cryptocurrencies into e-commerce platforms through diverse payment gateways marks a pivotal evolution in transaction methods. Innovations such as blockchain-based loyalty programs not only enhance customer engagement but also represent a shift from traditional rewards systems. This technological advancement facilitates faster transactions, reduces fees, and improves the overall shopping experience. The adoption of a wide range of cryptocurrencies, including privacy coins and stablecoins, demonstrates the flexibility and responsiveness of the e-commerce sector to consumer needs. 3. Market growth projections and economic impact. The projected growth of the cryptocurrency market by $39.75 billion from 2025 to 2029, with a compound annual growth rate (CAGR) of 16.7%. Underscores the economic potential of digital currencies. This growth is driven by increasing investment in digital assets and the broadening acceptance of cryptocurrencies among retailers. However, the market's volatility and regulatory challenges pose significant hurdles that stakeholders must navigate. Understanding these dynamics is essential for businesses looking to capitalize on the cryptocurrency boom while mitigating risks. For sector-specific adoption and competitive landscape, the adoption of cryptocurrencies in specific sectors such as gaming and remittances highlights the unique advantages they offer, including lower fees and faster cross-border transactions. In gaming, cryptocurrencies facilitate new monetization models, while in remittances they provide essential financial services to users in developing regions. The competitive landscape features established exchanges and emerging players, with traditional financial institutions increasingly integrating digital assets into their offerings. This dynamic environment necessitates strategic positioning for businesses to leverage opportunities and differentiate themselves in the market. 1. The South Sea Bubble 1720. This infamous financial crisis occurred when the stock of the South Sea Company, a British trading company, soared to unsustainable heights. The bubble was fueled by speculative investments and a frenzy of public enthusiasm reminiscent of the volatility often seen in cryptocurrency markets. When the bubble burst, many investors faced catastrophic losses, leading to widespread financial ruin and a re-evaluation of speculative trading practices. 2. The dot-com bubble, late 1990s, 2000. This period was characterized by excessive speculation in internet-based companies, leading to soaring stock prices that were disconnected from actual business performance. Like cryptocurrencies today, many investors were drawn in by the promise of revolutionary technology without a solid understanding of the underlying business models. The eventual crash led to significant financial losses and a restructuring of tech investments, echoing the current challenges and volatility in the cryptocurrency market. 3. Tulip Mania 1636 to 1637. Often cited as one of the first recorded speculative bubbles, Tulip Mania in the Netherlands saw the prices of tulip bulbs reach extraordinary levels, driven by speculative trading and public fascination. The market collapsed dramatically, causing financial distress for many who had invested heavily. This historical event shares similarities with the current trends in cryptocurrency, where rapid price increases can attract speculative investments but also lead to significant losses when the market corrects. The future outlook for cryptocurrency adoption across e-commerce, gaming, and remittances indicates a significant shift. With an anticipated 35% growth by the first quarter of 2025. This surge is expected to reshape transaction dynamics driven by changing consumer preferences, technological advancements, and the increasing integration of digital currencies into mainstream financial systems. Key predictions for cryptocurrency adoption. 1. Widespread acceptance in e-commerce. The integration of cryptocurrency as a payment method is set to become mainstream among e-commerce platforms. A growing number of retailers are already accepting cryptocurrencies, and this trend is likely to accelerate. By 2025, major brands will increasingly incorporate payment gateways that support diverse cryptocurrencies, appealing to a tech-savvy consumer base that values speed, security, and lower transaction fees. 2. Rise of privacy and stablecoins. As consumers become more concerned about privacy and security in online transactions, privacy coins like Monero will gain traction. Simultaneously, stablecoins such as USDC and USDT will rise in popularity, offering a hedge against the volatility that has historically plagued cryptocurrencies. This dual demand for privacy and stability will shape payment options in e-commerce, making transactions more appealing to a broader audience. 3. Innovative loyalty programs. Retailers will leverage blockchain technology to revamp loyalty programs, rewarding customers with cryptocurrencies or NFTs instead of traditional points. This innovation will enhance customer engagement and retention as consumers see the potential for rewards that can appreciate in value over time. 4. Growth in gaming and virtual economies. The gaming industry will continue to adopt cryptocurrencies for in-game purchases and transactions, allowing players to use digital assets seamlessly within gaming environments. This will not only streamline payments but also pave the way for new monetization models such as play-to-earn games, which reward players with cryptocurrencies for their participation. 5. Enhanced remittance solutions. Cryptocurrencies offer a compelling solution for cross-border remittances, providing lower fees and faster transaction times compared to traditional methods. By 2025, we can expect a substantial increase in remittance services leveraging cryptocurrencies, particularly in regions where traditional banking infrastructure is limited. 6. Regulatory developments. As cryptocurrency adoption increases, regulatory frameworks will evolve. Governments will likely implement clearer guidelines to address consumer protection, taxation, and anti-money laundering (AML) measures. This regulatory clarity will help foster a more stable environment for cryptocurrency transactions, further encouraging adoption among consumers and businesses alike. 7. Technological innovations. The advancement of blockchain technology will facilitate the growth of decentralized finance, DeFi, and other applications that enhance the utility of cryptocurrencies. Smart contracts will become more prevalent, allowing for automated transactions across various sectors, including real estate, insurance, and supply chain management. 8. Competitive dynamics. The competitive landscape will see established financial institutions increasingly integrating cryptocurrencies into their offerings, posing challenges to traditional payment processors. As major players like PayPal and major banks begin to offer crypto services, the market will become more competitive, leading to innovation and improved services for consumers. 9. Environmental concerns and sustainable practices. As concerns about the environmental impact of cryptocurrency mining grow, there will be a push towards more sustainable practices. Solutions such as proof-of-stake mechanisms and the use of renewable energy for mining operations will become more important, influencing the adoption of various cryptocurrencies based on their energy efficiency. Conclusion. The anticipated 35% growth in cryptocurrency adoption by Q1 2025 reflects a pivotal shift in consumer behavior and technological advancements. As e-commerce, gaming, and remittance sectors continue to embrace digital currencies, businesses must adapt to these changes to remain competitive. Regulatory clarity will play a crucial role in fostering this growth, while innovation in payment solutions and loyalty programs will enhance the overall consumer experience. The future of cryptocurrency is not just about investment, it's about transforming how we transact in an increasingly digital economy.